Mr. Lawrence Kimathi, welcome to Markets Today.
Thank you.
Very good numbers on KCB. We're seeing 5% year-on-year growth. Maybe you can help us understand the trajectory of the income statement.
5% is probably one of the lowest percentages we've delivered in a long time. But I'm happy with the numbers because they are coming from the right sources. So our total income is growing at double digit.
Okay.
That is when your top line is growing, you've got a lot more sustainability. In the interest rate cap, we don't have too much leeway in controlling how much we charge, but we have leeway in growing our fees and commissions by bringing in new products, being able to serve the customer better, and we are able to monetize that. So that has driven our top line growth. The 5% has been impacted largely by increase in provisions.
Maybe I can just hold off before you get to the provisions. If I take you back to the total income, where was the growth? Was it in the funded book or non-funded?
Non-funded.
Non-funded.
Yes.
What was non-funded year on year?
15%.
15%.
Yes.
And funded?
5%. Yes.
So you're not seeing too much traction on your loans?
Actually, loans have grown. The loans have grown by 14%. But as I said, we lost yield because of the CBI rate going down 100 bips last year. So when you're comparing year for year, we are comparing charging interest at 14% versus charging interest at 13%, which has a massive impact on our book.
Then I think my final question on the non-funded, is that largely driven by these new products for laser and mobile banking, or is it just from your general business?
It's a combination of both, but the big contributor is the new product, which is actually, I wouldn't say it's a new product. It's we've always had KCB and Pesa. What we did was we invested in a proper platform that gives very high transactions per second, gives a lot better customer experience, and customers came in. We're processing, there are times we process upwards of 150,000 applications a day. So that is really what has driven. And then in the second quarter, we partnered with Safaricom on the Fuliza, which has also contributed.
So this platform, is it a platform that enables you to integrate faster with Safaricom, or is it a standalone platform?
It is a standalone for KCB. Yes.
Does that mean that what you're doing with Safaricom, you can do with any other person, any other mobile network operator?
Well, the capability is there.
Capability and scalability is there. So
absolutely.
That's a line to watch out for.
Yes, absolutely.
So 15%, do you think that happens for the second half of the year?
Actually, we think we can do better because as I demonstrated earlier on, the fees and commission side has grown very well. Our FX business is slightly lagging behind. We need to, we've recognized that, and we need to do a bit of work to bring it up. So we can close the year at 20% total growth. So second half of the year will be much more robust in growth.
Exciting. Yes. Now let's come to the elephant in the room, provisions.
Yes.
Because your cost to income, great improvement there actually.
Yes.
But then the pre-provisioning, please help us understand that.
Yes. So last year we embarked on all the banks globally, implementation of IFRS 9. Whenever you're implementing a new standard, the global accountants body recognizes that it will be unfair for you to take a hit of correcting prior year non-compliance because the standard was not there. So they allow you to actually take a full hit into your balance sheet. So if you look at the cost of risk last year, H1 was 0.4% because we are taking advantage of that, and that's global. That's not just KCB. That's what all banks did.
What is it now?
It's now gone to 1.3%.
1.3%.
So a massive increase in provisioning because of one that. Second bit is, as I mentioned earlier, our new platform, the loans have quadrupled. We are lending a lot more because we've got the capacity, and the customer experience is much better. As you'd expect, when your loans grow, even if your NPL ratio is the same,
but
the absolute number goes up.
Is increasing.
Yes.
So is this the pre-provisioning, the jump 266% year on year? Is that a one-off? Do we expect a similar performance at the end of the year, or how should we look at it?
So at the end of the year, it will. I don't think it will be 266 because as we moved on last year, our cost of risk did grow from 0.4. Second half of the year went up.
What was it at the close of the year last year?
0.8, if I recall. Yes.
The comparative will be slightly different.
Will be slightly different. But now what 2019 does is that it sets the new base. So going forward now you'll be comparing with the correct base. So I would argue in many ways that comparing 2019 to 2018 is not apple for apple because we were implementing a new standard last year, and also we've got this new growth in our mobile world. So I would say 2019 should set the base now for comparison going forward.
Okay.
Yes.
So if I'm looking at it, you're saying top line 20% growth coming from the non-funded side.
Yes.
And then the provisions probably a better
performance in the second half of the year.
So
yes.
5 to 10% is that the guidance that you're giving?
Yes, we did.
5 to 10%.
Well, for full year,
yes,
I would say about 10 to 11.
10 to 11%.
Yes.
And that brings me to the final question on the income. What does that mean for your dividend? Does it change from what you paid last year? Does it remain the same, or probably that's the decision of the board?
So our dividend policy guides our decisions on how much we pay, and our policy is to distribute up to 50% of annual distributable income. So that still remains what the second half of the year. And also remember, we're in the middle of an acquisition.
That's true.
Once we acquire, that acquisition will require capital. It's known in the market that NBK is undercapitalized, so we'll need to inject capital in there. We'll then define what level of dividends we will be paying. From our analysis at the moment, we see no reason why we cannot hold the same dividend that we paid in 2018.
So everything remains stable more or less?
Yes.
Okay, coming back to the balance sheet, so also some good performance there. And during your investor briefing, you did say that you're seeing demand from the personal household level
yes,
as well as manufacturing. So what key sectors are actually demanding for credit?
Yeah.
Is it short-term credit? Is it long-term credit? Is it for investments? Is it for capital expenditure? What is the nature of the demand for this credit?
I think it's a combination of all the ones that you've talked about. We've got personal credit, which is usually our checkoff.
Okay.
Our checkoff facilities, which is quite big. It's also the mobile bit, which we've analyzed what the mobile borrowers use the money for. A lot of them actually are business people. Mama Mboga, they borrow in the middle of the night, buy their vegetables and go sell them. So they interact with us maybe 3-4 times in a month.
Okay.
It's a 1-month product, but they come and actually borrow more frequently because they are able to convert their money. Manufacturing is starting to pick up again. We've seen a lot of interest coming out of that. And lastly, the mortgage world. We haven't been very aggressive in pushing that side. The demand is there. We are fairly cautious. We are also waiting for the full implementation of the Kenya Mortgage Refinance Corporation, KMRC, because that will help us be able to do the matching of long-term funds with the long-term assets.
Okay.
Yes.
All right. So still sticking to the assets. So the rate cut decision, I know it's really out of your purview, and we're waiting. We're all looking at Parliament to see what happens there. But as you're planning internally, are you expecting to reallocate more capital in case anything happens? I mean, moving from lending to the government to lending to the private sector. Is that something that you're anticipating? And what does that mean really for your loan growth outlook? Maybe for the next 6 months to 12 months?
If the rate cap is repealed, usually it would happen around October, November. So we don't see much of an impact this year. In terms of impact in our projections on loan growth. But going forward, we obviously will see private sector credit increase from the 5 that is currently sitting back to maybe close to 20, 18 to 20 as an industry. As an industry, we all obviously will participate in that. Will be part of the banks that participate in that growth, because it allows you to bring in more risk into your pricing.
That's true.
And you're able to lend more. From a capital point of view, we are well capitalized. We've got very good buffers, so we don't see ourselves going to ask for more capital to fund growth. And neither do I see it impacting our dividend policy.
Okay.
Yes.
Who would be the potential of takers if anything happens to the rate cut?
I think we would certainly aligning with the Big Four agenda. As I said, the KMRC is very important in us pushing for affordable housing, but even the other mortgage side, which the demand is there, we see that being something that we'll be looking at. Agriculture is something we want to get into. We've got a product called Mobigro that we're in partnership with the MasterCard Foundation. We see a lot more being able to do a lot more there, because government is actually has changed the structure of the agriculture. The reason agriculture is not the banks don't participate heavily in it is because it's very fragmented. So you're looking at 1 acre, 2 acre farmers, and it becomes very difficult. So it needs to have an aggregator who then, is able to bring more farmers together, and you can then be able to structure finance.
So the many exciting opportunities. I think my second last question to you will be on your funding. So how are you looking at funding? I know you did mention cost of funding is coming a bit lower for you. What is it currently at?
2.8.
2.8. Oh, fantastic.
Yeah.
So you think this can actually get lower?
Well, there's opportunity.
There's opportunity.
Funding is a function of also how the government spends. So if there's liquidity in the market because government is spending, then money circulates.
Okay.
We see the budget has been done. The Eurobond is on board. So we expect going forward, the payment of pending bills also has been done, so money is starting to circulate.
So improve liquidity for the second half of the year.
Yes, absolutely.
Then the final question, are you happy with the price that you're getting on the stock exchange? Because we've been seeing a couple of net outflows from investors.
No, I'm not happy, and I think this is the answer you'd get from all companies that are listed on the stock exchange. The analysts actually value us at over 50.
Yes, actually everybody I've seen is 50,
yes,
50 to
yes,
53.
Absolutely. So our stock exchange does get impacted by the activity of foreign investors, who always have sort of a cautious approach because of the shilling. So they do discounting of how much they can participate in our securities exchange because they worry that the shilling can slide and that will impact their earnings. So, we are hopeful that stability of the shilling will bring more of them in and we can achieve our true valuation. Okay, so
50 shillings is the thing that we need to look out for, but then we also need to understand what the foreign investors are looking at with regards to currency.
Absolutely.
Are you concerned about currency?
Not so much, to be honest. I've seen it come under pressure in the last 6 weeks or so, but I've always believed the inflows and outflows of the dollar, which is really what we measure against. Sort of matched. You can see the current account deficit has been coming down from January.
Some huge improvement.
Absolutely. So that sort of talks to some of the fundamentals that support the shilling, but we don't live in isolation. So the global geopolitics also do come into play. Brexit, the trade,
the trade wars, currency wars, global
yes, absolutely. So that will impact the shilling. But I wouldn't say I'm overly worried about the shilling strength.
All right, Lawrence, that's fantastic.
Thank you very much.
What are your parting words? What is it that we haven't captured in the KCB story?
You've done actually a very good job.
Thank you.
Yeah, well done.
Thank you. But there must be something I have left out, something that probably is pertinent for investors who are looking at this stock. But thank you very much for your kind words.
Frankly speaking, I can't think of anything we've left out at the moment. Yeah, because we've covered the valuation, we've covered the acquisition, the shape of the book.
Yes.
Yeah.
Oh, fantastic.
All right.
So we just need to get investors looking at it to cover this element of value arbitrage that KCB offers.
Absolutely.
Thank you so much,
Lawrence,
for the time.
Fantastic. Thank you very much. Yeah.